Bitcoin trading almost up to the target that we had yesterday, which was set at $60,000. So we were expecting the short squeeze to take place. In today's show, I'm going to give you 3 reasons why that short squeeze has occurred and why this will drastically change the outlook for the market if specifically bulls can reclaim $60,000 and hold that particular area. So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed, and then we'll get straight into the show content. Of course, the banter bubbles over here on the daily are all going to be green, but now if you go into the weekly for the first time, we are starting to see some of these coins picking up back into that green zone. So we have 𝗕𝗢𝗣𝗕𝗣, Notcoin, Mantra, which has been one of the top performers, one of our big bags that we've been playing for a long time in the real world asset sector. We have EGLD, and then we have 𝗕𝗫𝗣𝗅, which is experiencing a pretty big short squeeze, and you could see this in a lot of different coins. I'm going to show you why as well. Specifically with 𝗕𝗫𝗅, you are seeing something like that. So guys, smash the like button and let's get straight into the 3 particular reasons for the short squeeze, and then most importantly, what that means for the next move for Bitcoin and what's likely to come. So reason number 1, of course, the liquidation areas were sitting above. We said that was going to be a magnetic draw that stuck out like a sore thumb, coming straight into the $60,000 territory, grabbing the liquidity. That was a buildup of shorts that were ultimately, of course, attempting to short the market, raising their stop losses or at least dropping their stop losses down as price moved in their favor. And it was just a matter of time before eventually you would get that momentous spike towards the upside. And we spoke about it yesterday with the Wyckoff accumulation schematic, saying that if we get above $60,000, you're going to confirm what's called the spring phase in that Wyckoff accumulation schematic, deviating back into the range. And therefore, you would be shifting the entire outlook of the market. But until then, we do need to remain cautious because $60,000 is where the magic's going to happen. It's either going to be a reclaim or rejection from that area, and that is going to be our point of control. The other reason is that the ETF net inflows have been pretty aggressive in the last couple of days, and this is actually just an outlook since the ETFs began trading on the 11th of January, that being for the spot ETFs, and you can see the systematic bidding that's been occurring over here. Yes, we've had lull periods of where sometimes there's a decrease in the ETF and there's been selling, but for the most part, ever since January, it's been up only for the ETF chart, with higher highs and higher lows being printed, and now we're moving back into that momentous shift towards the upside. What is the third reason? The third reason for the short squeeze right now has something to do with tomorrow's data, that being the CPI core data, which is going to be coming out. You can see over here the forecast, at least for the year on year, is that it's going to be coming in at 3.1%. You can see the previous result was 3.3%. So the expectation of the market is that the inflation is going to be coming in lower, which increases the chances that they'll eventually cut interest rates. And when they cut interest rates, well, people have a much better time and look to put their money into the market, into real estate, into things like that. And consequently, we have this blow off top period in the stock markets as well as in the real estate markets. We expect that for the next 2 years. And that is going to drive the crypto markets. Now, why is this the third reason? Well, because we don't have the result yet, right? The result is only coming out on Thursday, and the expectation is 3.1%. But if you look over here at 𝗦𝗚𝗚𝗏, now there's no sources over here. Unfortunately, I don't have the source of where this came from. But as 𝗦𝗚𝗚𝗏, he is the source, at least over here. He's saying the CPI print has been leaked. We're coming in under expectation by at least 0.1%, the first rate cut in September. Everything is going to rip market off. Now, he is usually a pretty reliable source. So take that part with a pinch of salt. I don't have factual data of the leak, and at the end of the day, we need to wait for tomorrow. It's all going to depend on what happens as price moves into that 60K level and we get that CPI print. We also do still have a little bit of a concern when it comes to the stock market being on that TD9 count, right? The Tom DeMark 9 count over here is usually where you expect either a pause, so a sideways consolidation in the market, or even a 1 to 4 candle correction. That's on the S&P 500 on the top left, the Nasdaq on the top right, and then you've got the Dow Jones, which has slightly been lagging. The trend is still up, so all in all, that's bullish. Pullbacks from the stock market pullback would be buying opportunities, not ultimate market cycle tops or anything in line with that. Simply just a pause or small correction, which gives you a buy the dip opportunity. So we do need to be aware of that in case Mike Alfred is wrong over here and the CPI data comes in higher than expected. That will become a shock to the market. That will probably pull the stock market back. That will get the DXY, the dollar index, ripping to the upside, and consequently it would be a trap scenario for crypto. But I'll cover all the trap levels for you guys in today's show. High time frame though, I want you guys to just relax. Simply put, for if you focus on this over here, the first 80 days that occur after the Bitcoin halving are generally reaccumulation phases, and we've seen that within each part of the cycle, right? And then following that is usually the parabolic phase. This happens every single time. You can look at the first halving cycle just represented on a very simple chart over here. Consolidate, sometimes you pull back a little bit more, and then expect that the next 6 to 12 months you rip straight to the upside. Look at the second halving cycle over here. You pulled back into that over there, and then following those 80 days of accumulation, you have a straight parabolic phase for about 12 months later. Here you have the COVID one, the COVID dip that came before there, or shouldn't say dip, but absolute monumental crash into that region. Consolidated sideways into the 80 days following the halving cycle. And then as you can see over here, looking 12 months ahead. And we're going to look at some of that data, right? What happens after the big crashes 6 and 12 months later, and you'll see what the outlook looks like. And we'll look at the fear and greed as well, right? You look at big moves following on. So here's a little bit of perspective. This is what you're starting to see, right? You're seeing that same consolidation and pullbacks into that region, and then you're looking for higher prices. For some reason, you guys in the chats believe it's my birthday. It's not. But if there is another Kyle's birthday, happy birthday, bro. All right, let's continue on over here. Crypto quant, right? Crypto quant, if you look over here at the realized price and the various different age bands, this cycle is following along very similar as well, high time frame to what we're seeing in what we saw at least in 2016, right? So similar, right? You're expecting that reaccumulation phase over here, and then you're looking for higher prices. It's just a question of how low could you go, right? You could go all the way down to $40,000 for Bitcoin, and it would still in the high time frame be a reaccumulation phase. Now, you wouldn't want to cut all exposure to the market and get too greedy. There are a lot of people that are talking about double tops, and you're looking for the end of the bull market. Based on the timing cycles, I would not subscribe to that belief, but rather be looking for opportunities to build longer term positions. Now, we are still below that 21 exponential moving average. You can see that the stochastic RSI is attempting to build back momentum up over here and get long again, but we do need to get above that critical zone, and it all lines up at $60,000. If you zoom in over here, where's your 21 EMA coming in at? Well, currently it's situated at $60,705. If price can reclaim that, not only are you reclaiming that 21 EMA, you're also reclaiming your range low level, which is going to be the green line. And for full confirmation, you want to break above last week's high, which is coming in at 63,000, right? Now, we can look at another chart over here that I brought up yesterday. And I said, well, we would love to see something like this, right? Left shoulder, head, right shoulder, but this will take time to play out. So watch as price attempts to get back in here. If you do, you might have a confirmed major low in the making. And then the question is, where does price stall out next? Do we reject again from the top side over here at the neckline and come down? If so, this is going to present a wonderful opportunity. You are breaking back above your low time frame moving averages, but there's going to be a cluster of resistance again coming in at that 63K level, which is why you need to break above this previous week's high. Very, very important. You need to get above that. Another area, right, of significance that we're attempting to reclaim right now is the 200-day moving average, the white line over here. We showed you that, the market doesn't spend very, very long times or amounts of time below this moving average. How do you know if it's a bullish market? Well, the moving average should be angled upwards. It is angled upwards. It's not angled downwards. In a bear market, you can spend a lot of time below it, but you'll know because the moving average will be angled towards the downside. Right now, it's angled towards the upside, and price is attempting to reclaim. So again, get back inside the range at $60,000. You would confirm that deviation, and the whole market will talk about this. cautious. And then it becomes a self-fulfilling prophecy. People feel much safer when you're above that, and consequently they start to buy back into the market. Now, this is where the level is that you want to reclaim for full safety, right? You can see over there, again, around that 63K level. That is your last lower high. That will confirm the deviation back into the range. You'll break above the 50% level. The miners are still selling over here as per the hash ribbons indicator. So consequently, we will have to become cautious. When you get above this region, we will become cautious. We'll have to look for short opportunities once you get into the 66K zone, because that is where you would expect a major rejection if it were to happen. And I'm just like any of you out there. I'm hoping that this will not play out. I'm hoping that trade will stop out and we can continue with the long trajectory, looking for higher prices in the days and weeks to come. This was the chart that we looked at yesterday as well, where I simply showcased what was happening with the Wyckoff accumulation schematic. We spoke about the spring phase, which was the sweep below the final support level over there, panicking everybody within the market. And if you get an immediate reaction back inside with a spring, which is looking very, very similar over here. And if you look at that spring, you might get an initial reaction or rejection from the zone, because this is going to be key resistance. I'd be looking for potentially something like this, right? A big push up, maybe you get a small rejection. But if you do hold that key range low level of support, which is around that 60K, and you start to pick back up again, you'll have the presence of that W formation, right? If you look over here, you'll have the presence of the W formation, and you'll be looking for higher. Either way, this is going to be resistance. Where price is coming into right now is resistance. 60K is the range low. It's also the 18 exponential moving average, that being the pink one. We want to see those flip up. So you don't need to rush into any positions. It will take a bit of time. We've had this beautiful parallel channel, right? Governing price towards the downside like that. There you go. So the pink one holding those horizontals, that was a key pivot level. We're looking for the reaction over here. We got it. Now it's just a question, can we get inside? Can we get inside the range or not? We are above the pivot level. The pivot level is your yellow line, which is allowing the RSI to trend back towards the upside, pushing prices higher and higher. This is your low time frame picture, right? You're going to get a bit of resistance over here on the 4-hour time frame coming into this candle over here. Again, 60,500. That will be met as well with the 200 EMA trending down, trending down, trending down. So don't expect that price will necessarily just rip straight through. And even if it does do that, by some slim chance, you are going to get a pullback and a throwback into the same region as support. So point being, on the lower time frames, this is the zone where you want to warrant a little bit of caution and not chase price action into the zone, because even if you do break through this with a bit of a guard candle, that guard candle will be retraced and you'll essentially be able to get long at exactly the same point, right? So the time to long was down here into the 60K region. The time to start to be cautious is right now coming into that 60K region. That is where you want to start to be careful. Now, some signs that we can look at over here in terms of both Bitcoin and ETH. Well, firstly, Bitcoin has reclaimed the VWAP. Okay, the VWAP being the purple line over here, so the high volume area, you have reclaimed that. Ethereum is still behind it. Okay, Ethereum's is coming in at 3,139. There is going to be a little bit of resistance into that zone. So it's something we need to be careful of. At the end of the day, this was one of the biggest liquidation events, that downturn back into these lows over here, where price came essentially all the way down to, what was it, 53,320. If you look over here, liquidation wise, the red lines at the bottom, it's one of the biggest ones that we've seen since FTX. Now, your expectation is following these major liquidation events, most of the time you do get a little bit of sideways price action, or you start to move up, right, in terms of price. Now, we can look at the prior liquidation events and we can actually see the response of the market 1, 3, and 6 months after that event, and specifically asking yourself the question whether you were in a bull or a bear market. So let's just quickly bring up this chart over here. Are you in a bull market or bear market when reclaiming those levels? Well, simply put, a very easy way to understand what is happening within the market is following the halving cycle. You're probably in a bull market. Never before have we been in a bear market. After the halving cycle creates that supply shock, right? The mining reward gets divided in two, which means there's less supply coming into the market. And for some reason, it lines up with the global liquidity, which shows that new demand is coming into the market as well because the liquidity is moving towards the upside. So when we consider all these various different factors and we look and we isolate the scenarios to liquidation events within a bull market, this has been the results, right? 1 month later, price was up 42%. Then 3 months later, 95%. And then 6 months later was up 117% for Bitcoin. The next one, up, up, up. The next one, 1 month later, following the market liquidation event that happened in May of 2021, price was down 1 month later, but only 2.3%. Then it was up 32%, and then almost 60%. Let's look at the other bull market scenarios. SVB collapse, 1 month later, 41% up, then 30% up, then 28% up 6 months later. Same thing, market structure liquidation in 2023 in August. 1 month later, up marginally, only 1.3%. 3 months later, 36%. These are big moves for Bitcoin, right? And 6 months later, 96%. That could be the equivalent to a 5 to 10x return, 500 to 1,000% up for many of the altcoins. So even when you consider the bear market scenarios over here, in many of the times, 1 and 3 months later, prices were up. But if you look at this over here, well, we're not in a bear market. We're still in a bull market. We're just going through a corrective phase within that bull market. And you can actually have a look at, in those bull market environments that are labeled over here, what the fear and greed was doing at that given point in time and relate it to what it's doing right now. Right now, the fear and greed is at 28, right? If you do go to, let's use one or two of those examples. Let's use the COVID crash, which was, of course, over here. What was the fear and greed on the COVID crash? That was down here. The fear and greed went extremely, extremely low. It's hard to pinpoint it and get it perfect, but it was down in those single-digit reads, something that we don't see very often. And then price rallied. Let's look at the next one. This one was in on the... I'm just wondering if this is running on, okay, the date first. It's not US way, it's UK. So the 3rd of September 2020. Let's go to the 3rd of September 2020. That would be, okay, we are here. Let's move forward, move forward, move forward, move forward. The 3rd of September, almost there. There we go. 3 September 2020. Fear and greed was very, very high then. You got a liquidation event. Fear and greed came down just following that liquidation event into those 30 regions, into the fear zone. And then look at what happened with price following that. So right now, that's where we're at, right? Fear and greed has come down pretty aggressively, and it's caused a major, major reset in the market. The other thing that we can look at as well is what's happened when June closed red. Have we ever had 2 consecutive red closes, right? When June is closed red, most of the time you followed on with a green July. Right now, we negative 6.9% on the June Bitcoin close. We're negative 6.1% currently on July, but this can obviously very easily change if prices do start to bounce and reclaim those key levels, right? So $60,000 is that pivotal point. We want to see price close above. It has caused a market-wide reset on all the various different altcoins. When you look over here at the RSI heat map on the weekly time frame, we can also toggle through this and look at the 24-hour time frame. Still very, very fearful. The market is still in the weak zone over here for the RSIs. And again, once Bitcoin reclaims that 60K level, the market will feel much safer to start to go long again because you're above the 200 MA, the 200 EMA on the daily, and consequently you closing above key levels. People are more willing to put their money back into the market, and you'll quickly start to see the RSIs increase in size. But it's a double-edged sword, guys, that you have to understand that it's a double-edged sword. Rejections from 60K will bring all these altcoins that are moving into the strong zone over here, the ones that we're looking at, for example, Super, you have Pith over here, Ondo, Bonk, Ton, BMEX, those will all move back down if we do reject from that 60K level and go on to print a new low. So watch for those levels very, very carefully as you go about your trading. Now, again, still downtrending over here on the ETH BTC chart. Again, full-blown altcoin season probably occurs when you start to take out these highs. That's going to be sitting at 0.060 on that ETH BTC scale. Be patient. It is looking like this is a reaccumulation phase and high prices are to come for ETH BTC, meaning ETH outperforms BTC, but it's going to take time. Be patient over there on that particular trade. Speaking of which, if you do want to trade Forex, crypto, commodities, the stock market, dollar, everything all in one easy to use platform, guys, consider Prime XBT. Of course, they are one of the show sponsors. Been with them for the longest period of time, never had an issue. The link is in the description below. If you are looking for a one-stop shop with everything, you're actually getting up to a $7,000 sign-up bonus. Or if you know what these commissions come up to over time in terms of how much it costs you to trade, you can choose the 25% discount option over there. The link is below. All right. Total, if you look at the total crypto market cap, well, ultimately, we do need to see that go up. In order for the whole market to be healthy, we actually need to see this number going up and trending up. This is almost more important than seeing Bitcoin going up, right? Because it means more liquidity is coming into the entire market. Now, if you look at this tweet over here from Max, he's shown the reaccumulation phase, the power of three, right? Deviation down into the demand zone, which we've clearly hit over here. Let's just quickly move that up so you can see it next to my head. There it is. There's the demand zone, the little order block that led to the big move up. You've come perfectly back into that region. And now you're looking to reclaim the bottom of the range, which is literally right here where we are at 2.112 trillion, right? If you get above 2.112 trillion dollars, you get inside that range, you break that downsloping trend line, you have the opportunity for potential expansion up to the 1.618, which will bring $3 trillion into the crypto market. Now, to remind you, things like gold, I believe, is trading off the top of my head. I think it's about $11 to $12 trillion market cap. This is not the market cap for Bitcoin in isolation. Bitcoin's around $1 trillion. This is looking at the whole entire crypto market, right? So to think over time, this will slowly start to gain market share and catch up towards gold is not out of the question. It's probable, right? So you are still waiting for those reclaims of those key levels. If you look at total 3, this is the picture over here. We have broken back into the mid-range, that being 556 billion. We want to hold above that, and we want to get back into the strong zone. Now, the strong zone is the yellow zone. Why? Well, that's the premium zone, right? You ask yourself, you have the discount zone and you have the premium zone. This is the premium zone on the top. This is the discount zone on the bottom. You want to load up in the discount zone of the range, and you want to consider profit taking in the premium zone. But there's an interesting fact over here. If price can get into the premium zone and it can hold in that premium zone, well, that's where the market will start to establish this as fair value, right? This becomes the fair value zone, and that's what leads to those big breakouts towards the upside. So all in all, watch as price moves over here, but it's always worth taking a chance at these lows. Stop losses go below. If price gets stopped out, it's fine. You'll enter lower on those altcoins. So there are a lot of altcoins I covered quite extensively with the Whale Room community on our live trading Zoom session last night. How many of these altcoins are coming into super, super key levels? And there's a lot of them. So you would expect a little bit of a market-wide bounce. Now, the top performers continue to remain the meme coin sector, right? The memes are bouncing the hardest, followed recently yesterday by the DEXs. And then after that, you're getting the L1s, right? The layer ones, things like Solana, Casper, Near. Those are some of the top performers in terms of the first to bounce. Another outlier over here is TIA, TIA, right? TIA, look at it trading over here at the top. And unbelievably, showing a lot of relative strength. I'll bring the chart up in a moment. You came into a key level, bounced straight from that range low order block region, and TIA is moving, and you're getting paid to actually be long on this because everybody seems to be shorting TIA. Look at the increase in open interest. Look at the aggregate funding rate over here. Very, very, very negative. Heavy shorts in the market on TIA, right? So it comes down to this, what 𝗕𝗓𝗓𝗕𝗓 says. The open interest of funding rates of some of these low float, high fully diluted valuation altcoins like TIA looks like it's a bit too consensus that they're going to get hammered by unlocks, because people are fearful of the unlocks and consequently they're trying to run into the shorts, right? But the unlocks are months and months and months away, and oftentimes these unlocks actually result in big pumps into the unlock. I know it's ironic, right? He says seeing some pretty compelling potential short squeeze setups. He doesn't use the word short squeeze, but that is what he means, right? Short squeeze setup. So we can have a look at some of those coins. Let's go through to it. Let's have a look at TIA. There it is. Let's go to it. What does this coin look like over here? There we go. This is Celestia, right? So you are getting a bit of a monumental move over here coming into this region. I haven't pulled this chart up for a while. Probably need to clean it up a bit. That was when we lost the parallel channel and it started to come down pretty aggressively, but all the way back down to these lows, right? There you have it. Perfect retest into that price support. Look at that wick over there on the chart prime momentum oscillator over here. You have that money flow starting to increase in size, getting bigger and bigger. You have the blue dot buy signal with a green triangle, and usually that's where you get pretty substantial moves. Now, I know Rand's fundamental target on this is $11 to $12, right, which is going to be coming up over here. So keep an eye out on that. Probable short squeeze, at least it lines up with TA's fundamentals, line up with the TA. That is going to be the next major level of resistance. You do still have a downsloping trend line. So I'm not advocating that you buy these by any means. I'm just telling you, watch out. There is going to be short squeezes when it comes to a lot of these coins over here. You will get pretty big, bad short squeezes because a lot of these have fully reset in terms of the momentum oscillators. So we can have a look at a bunch of the different charts. Let's take a look at a few of the others. Let's quickly see Mantra today. How's it doing? Still holding above that range high over there. Ondo looks to be taking the range over here. You also have the momentum oscillator with the oversold territory being hit. You're now printing a green triangle, which is a buy signal, but we're waiting. We're waiting for the reclaim over here. This is what I want to see. Let's quickly clean this up a little bit. Okay, clean that up. We know that's the target. We don't need that over there. Can I get rid of this one? No, I can't. It's going to drive me mad. I have to, guys. I'm a little bit OCD. There we go. Okay, this is what we're looking for over here. So we're waiting for the trigger on this trade. What would the trigger look like? This is on Ondo. You're looking for something like this, right? You're looking for a move up above these highs. Big move up. So you need a bit of a short squeeze over there. Throw back into support over here, and that's where you're going to get your trigger for the long. Okay, that's the Ondo trade. Real world assets been one of the top performers. We'll look at a bunch of coins. If there's anything you want, please do let me know. Okay, let's go see quickly how Solana is doing. Solana has resistance at 165. There you go, $165 coming in on the top side over here. You also got the blue signal over here. Money flow is increasing. Momentum is moving towards the upside. All in all, that does look still fine. You have Casper. Casper needs to reclaim back above 18.4, but historically definitely been one of the stronger ones. Polkadot. Okay, let's also have a look at Polkadot over here. Polkadot getting the blue signals over here, right, with bullish divergence. Prices coming down, momentum oscillator moving up. You got the bullish divergence. This has hit the key level. It's broken the downsloping trend line. You've reclaimed the range low. So you're looking for a trade on DOT all the way up to at least the resistance level is going to be the range high at 774. And thereafter coming all the way up to 1160, right? So I believe a lot of ecosystems, or at least a lot of projects, are starting to build on DOT. So we'll see fundamentally if it lines up as anything majorly bullish. Okay, Sui. I think Sui was another one. Covered this yesterday on Whale Room. This was ultimately what we're looking for. You're looking to trade the range over here, long from the bottom all the way to the top. Look over there, momentum oscillator also starting to turn back up with a little bit of bullish divergence in play. So that's looking for a move all the way up to about $1.05. $1.05. Okay, Injective. I think this one was also in a key level. Injective holding that range low. Again, if you get a market-wide bounce, you're trading the range, right? Simple. It's very simple. That's the range. There you go. That becomes the range. So looking for longs at the bottom, shorts at the top. Had you shorted there, you shorted to the bottom, flip long, long to the top. It's just simply oscillating. Okay, we can look at Shiba Inu. I see that's one of the requests. I think SHIB is not, I don't know if it was SHIB, but it was Floki. I think that wasn't too bad. So Shiba Inu also printing bullish divergence. You're getting a lot of bullish divergence on a bunch of these charts over here, but I'm not in love with this particular one because it didn't hit perfectly into the key level. Could you get a spike up? Definitely you could. Floki, I think, looked a bit better, right? Here you have Floki. Floki came into the key demand zone over here. Very, very important demand zone. Looking for a reaction out of this region over here. Full confirmation of the move towards the upside will be when you break above these candles. Those are coming in at 18,552 are the last 5 digits over there. Okay, what else? What else have we got, guys? Polygon, you want to see Matic? Okay, Matic all the way down at the range lows. Again, you have a blue buy signal. It is oversold indeed. No bullish divergence on this one yet. It needs a little bit more to print the bullish divergence, but ultimately you're seeing the opportunity for deviation back into the range. Where do you confirm that this is taking the move all the way up to about 75 cents? Well, you'd need to wait to break above this zone over here. I'd wait for the break, and then I'd look for the high-low opportunity. But keep in mind, this has not been a top performer, at least against Bitcoin. So you're waiting for the big move up, throw back into this region over here. You look to get long into the top side, something like that. That's what I'd be looking at for Matic. All right, what else? What else? Brett, let's go to Brett, see how some of those memes are doing. Okay, Brett, where are you? Where are my memes? Here we go, Brett. Okay. It's a tough one to chart at the moment. It is trying to hold the mid-range, which is coming in at 11 cents. You know, the momentum oscillator can come a little bit lower. It needs time to build up over here. But I think anywhere around this mid-range level, if you are looking for opportunities, it's going to be in that 11 cent region is probably pretty decent. Okay, Jupiter. We haven't looked at Jupiter for a while. Let's see what Jupiter is looking like. Okay, Jupiter. Okay, let's see. So you do have bullish divergence on Jupiter. Let's just see in terms of the key levels. Okay, I'd be viewing this area as one area of interest, which you are getting back above. And then, of course, this would be the fair value gap. You have actually come into the fair value gap. Those wicks over there came into the fair value gap, so definitely a pretty decent zone. But ask yourself, is this pumping against Bitcoin and ETH? Chances are probably not. Maybe you have a fundamental bias and you want to buy for the long term. Then theoretically, it did come into a value zone and you are looking for at least a little bit of a bounce out of this region. Okay, let's see Arweave. How's Arweave doing? And I think I have a little bit of time left, just a little bit of time left. Where did Arweave go? Let's try that again. Arweave. Okay, let's go. Okay, there's Arweave. This is the trade that we were looking at. Bullish divergence taking place over here as well, coming off the oversold territory. I think that's a very, very viable place to look for a long trade, at least up until this region over here, which is going to be major resistance at $29. If you can get above $29, expect probably you're going to push through. You're going to see a little bit of weakness. Price action will slightly stall into this region, and then you'll probably get a pullback. Maybe it comes almost back to entry, and the next attempt will most likely break out. So that's what I'd be viewing over there. But you need to get acceptance, right? So far, you're looking like you're trying to get acceptance back above this key level for Arweave, which is 2250. But if you can't get acceptance now, it's possible that you see something like that. So totally dependent on whether Bitcoin holds above 60K or rejects from 60K. Remember, the low time frame trends have been pretty hard hit. There's a lot of work for the bulls to do to get those trends back up, right? Which way is this trend? Look at Bitcoin on the 4-hour time frame. Which way is this trend? What do you see over here, guys? What do you see? You see a series of lower highs all the way down. You see a series of lower lows all the way down. You have one higher low in the making, right? One higher low. That's all that you have to work with from the bullish sentiment is one higher low. You have not broken any structure. Where do you break structure? If you get Bitcoin above $64,000 and this level changes over time, right? So today it's 64. Surprise, surprise. If you come back tomorrow or next week, believe it or not, that level is going to be different because we moved down, right? This is the old level to break above. Then it was this level. Then it was this level. So now this is the level that you need to get into to print a higher high. The throwbacks into the next high low, you can now say there's been a proper break of structure. Structure has been broken from downtrending into potentially uptrending, and you're looking for a major reversal. Right now, understand that it is still very, very risky to ape into longs because you are still downtrending. Okay, cool. We'll take a few more. By the way, before we do, I want to remind you on BitGet, they actually have a great opportunity over here. Olympics are going to be coming up in Paris. If you want to win 2024 tickets, you can do so via BitGet, right? Use the link in the description below. Go to BitGet. 21 days, 9 hours is the amazing promotion. You spin the wheel. You can win a bunch of these. You can win the Paris ticket. You can win Notcoin, Ondo, Blast, beer, or water. Water is a meme coin that's also been doing the rounds lately. So use that in the link in the description below. Also, not only to mention that, but if you trade, you can win also 20,000 BGB tokens. What is that worth? Just over $20,000, right? Here is the BitGet chart. BGB token been increasing towards the upside. 20,000 is worth 20,800 because it's $1.04 per token. So all the links are below. Also, before we continue, if you do want to check us out over here in Whale Room, we have amazing, incredible additions to the team over here where you're getting massive updates, right, daily. So I'm giving you updates over here, of course, on Trading Light, High Block Capital, what's going on with the liquidity on the high time frames, low time frames, everything. Legacy markets are in here. You also have my analysis on some of the on-chain metrics as well as normal trades. Here you have the Wyckoff accumulation schematic. We have scalpers in the house over here constantly making profits, giving you live trades in real time. Zoom sessions with all the various different traders as well. You have Josh as well, absolutely crushing it with a lot of different trades, most of them having been winning trades. And then we have Chris as well. Chris is also in here doing live sessions with you daily. Big focus on psychology. If you want to learn from Chris, he's writing up massive psychology sessions on the regular. So the links are below. I actually think that is all that we have time for today. Unfortunately, I'll see all of you on the next one. Have an absolutely stellar day. I'll see you guys at Whale School this evening. Cheers for now.